What's good, guys? Hope y'all are enjoying your weekend. We're going to take a look at your coin requests, XRP, Bitcoin, and we'll take a look at some setups as well that I've been eyeing. Looks like the market is gaining a little momentum here. Nice to have you all here. We're going to first take a look at XRP, just see what the market structure is doing, and we're also going to take a look at Total 3. I do see a little bit of a trend shift to the upside, and we'll explore the different trajectories that it may take going forward. So this is XRP here. You can see that this was your break of structure, right? Because we take out this low on April 3rd. Okay, so we take out this low from April 3rd on April 6th, so 3 days later. And then you can see that on April 5th, we went down by 25% in the span of about 2 days, so 1 day and 20 hours. And you can see that this is a very important part of the chart when you look at time versus price. And we can see here that it took out this low and then slowly started grinding its way up, and then you take out this high before the drop-off point. So this would be your change of character. We come down partially, and we just come down to the 618 when we take a fib from this low up to this high. You guys see how we just came down to this 61.8% fib? Okay. And then you can see this perfectly topped out, or we formed a local top here right at the 1.786. You can see how well the fibs work, especially the inverse of the 786. You see how it hit the 1.786, and then you had your partial decline here. So as long as $2.04 to $1.99 can hold, then it wouldn't surprise me that we come and revisit these highs at 223 to 224. Okay, and your draw on liquidity was this 4-hour fair value gap. You see you had a change of character, and then you wake to your 4-hour fair value gap as your draw on liquidity. All right, so this is your okay, now we can take a fib from March 2nd, from the March 2nd high down to this low on April 7th. And we'll just take a look at the fibs here, and we can see that 230 is our EQ, which would be the equilibrium relative to this high. Okay, now the reason this high is very important is because this took us 35 days to get to this bottom, and we went down about 45%. So 45% in the span of 35 days. when you take a fib from this high down to this low, you can see the EQ is right there at 230. So I'm thinking as long as these lows hold, we can make our way to EQ right above these highs. Because you can also consider this like a rising wedge formation, right? Like just from the naked eye, you could see that this is a rising wedge and you have 5 waves up here. So you have a lot of market participants shorting this area for the expectation of continuation down. But what if we just see a fake out to the downside and then a move back up to these highs to take out all of these short stops over here, all of these short stops, right? It can even do something like this where it wicks down to $1.99 and then pops off from there, right? If you lose $1.99, then yeah, we're going to come down to these deeper retracements right here. Right here. Now, something I've noticed on XRP, I keep bringing it up in the streams that I do, is that it's holding above the 200-day moving average very well. That's something I've also noticed, right? You see we tagged the 200-day and then on the weekly time frame, we just wicked below it, but then we ended up closing above it. So like I said, so this weekly closes in about 22 hours and 37 minutes. If it closes as a doji, I would consider that bullish, because this is almost like a bullish hammer, right? Where you wick below the 200 and then you close back above it. And then you have doji, and then you have a doji for this week. Next week we would likely have what's called a doji continuation pattern, right? Towards EQ. And then similarly to the small time frame, we also have people shorting this resistance right here all the way down. So think of how many traders are shorting this and then placing their stops here, here, right here, right here, right? And yeah, I think he can come up here to take out all of these stops. You can kind of consider it like a ball underwater, right? And sometimes this is what you get, where like you form a head and shoulders structure and everyone goes short upon the break below the neckline. But then you can see how this weekly candle closed like that. And now we're back up here. So yeah, head and shoulders fake out. That's what I'm thinking. Now, something I also see here on XRP is this small range, right? Now, what you can do whenever you come to your chart is always be in the habit of placing horizontal trend lines rather than diagonal trend lines. So when you look at price, instead of immediately placing a pattern on the price, put a range on it instead. So like, for example, you could say that, oh, this is a wedge pattern, right? And it's going to break up or it's going to break down. But instead of doing that, do this instead, where you place a horizontal range, right? Because then you can see the inefficiencies better. You see there's more space up here once it came down to this extreme, right? And then you can also use it in conjunction with fibs. So you see how it came down to the 786 here, came down to the 786, and then we have like what you tend to see, even if this was a fake out, right? Let's say we don't go back up to 223 and we come down towards the 200 day again, right? So that would mean that this is a fake out. Even if this was a fake out, you tend to see deviations above or below the range that you put on the chart. So you may see something like this, where you have deviation above this range, and then you come down like that. But as soon as you get above this fib right here, as soon as you get above this $2.14 to $2.16 area, then we can no longer consider this a deviation if it comes up here, but instead a breakout, right? A breakout, and it's likely we would take out these highs, and then we would come to around EQ at $2.30, like I said. Now, this structure actually looks a lot like Total 3. Like, the altcoins are just following Total 3 right now. And you can see here, it's the same structure, right? You have your change of character, your break of structure. So your break of structure, your change of character, a partial decline down to the 702, and right, and then we may come up to this inefficiency higher at the on the 4 hour, right? May even take the 200 day. So you can see that we're reaching for these highs here. This actually looks more ahead than XRP does, Total 3. And what we can do is we can use this indicator that I was showing you guys in the last stream. It's called CM Ultimate MA by Chris Moody. And a very simple indicator you could place on your chart, and we're currently above it on the 4 hour. You can check it out on the hourly as well. See, we're still trending up here. So what I would want to see here on Total 3 is just a move above this level. Very simple. Above 771.4 to 775. As soon as you get above this level, then you know for sure that the total altcoin market cap is going to go higher, and your alts are likely going to go higher from here. If Total 3 gets above this level, then we would come to take out this 4 hour inefficiency with the possibility of hitting this 200 day. As soon as you get above the 200 day, then we can say, oh, okay, this was likely the bottom. Because when we take a look at the macro chart on Total 3, I think I placed it here. Okay, so this is Total 3 here, you see? It's the exact same thing as XRP and BTC. Break of structure, change of character, and you had your draw on liquidity was this 4 hour inefficiency and breaker. You have a partial decline to the 702, and now we're reaching for these highs. So we would be, point of interest would be at around 809. And like taking a look at the wave count here on Total 3, it does look complete. Like, this looks like a finished ABC correction. As long as it doesn't go below this 673 billion. I mean, yeah, remember what I was saying, how if the market comes down to the 702, you have a rally like this, a small rally. Everyone thinks it's the bottom, and then it slams down to the 786, and then it rallies from there. We could have something like that. Like a bear could argue where we would still need to come down to the 786 at 648, like just one last scare to the downside before we have that V shape. But there is still a possibility that this 702 was the bottom. Something I also found interesting on Total 3 is when you try to measure where the C wave went, right? By taking a trend-based fib. So to find the C wave, you just take a trend-based fib extension like this, right? And look where we came down to when we measure the C wave. So if you take a trend-based fib from the top of A to the bottom of A and up to the counter trend, we see that the 702, or sorry, the C wave came down to the 1.702 and the 1.618. You see this? Right here. So let's see how it plays out. What I would want to see next week is a move back above that level I was telling you guys about. Just this level here. 771 to 775. And then a move above 809. And that 786 is right there at this 4-hour inefficiency that I was showing you in the previous chart. You see? And yeah, like when we take a look at it on the daily, nothing is really, like, it hasn't been structurally affected yet for the bullish case. Like this could still have a blow off top here. Let's see. And we'd be still targeting 1.6 to 1.8 trillion as the top. Everything points to 1.6 to 1.8 trillion. So when total 3 gets up there, that's how you know, like, we're topping out. Thank you so much, JC, for the super chat. I really appreciate it. So JC is saying, do you see any retrace level on PulseX if it all over the next day or week? Can you compare EHEX at this time last cycle using wave analysis and fib analysis? Yeah, okay, that makes sense. Yeah, so we'll also take a look at H bar and whatever coin requests you guys have. We're just going to take a look at EHEX very quickly. Let me just take a look at your first question here. All right. So in every stream, we take a look at PulseX. So let's take a look here. PulseX, and then we'll also take a look at EHEX as well. You know, PulseX is looking pretty strong. Like, it's up here 25% in a day. Wow. Yeah, PulseX, it got above our level here. That's crazy. It's now above the point of control. Exactly as we predicted. We were actually over here. We were over here on PulseX, and I said that it would oscillate back and forth, and then we would see the breakout above. And look what we're seeing here. There was 2 things I wanted to see on PulseX. Number 1 was us getting above this level at 402259, which would be this historical diagonal trend line. You see how you see this? Because this is a huge psychological support. We dip below it, everyone panic sells here, it oscillates back and forth, and then we get above it. Now that we're above it, the second thing I wanted to see is a move above point of control, which is where 70% or more of the volume is traded within this range. As you can see, now we're above POC here. On the daily time frame, the candle, it doesn't look bearish because Yesterday, the current candle doesn't look bearish. Yesterday's candle was a bullish engulfing, and then today's candle will likely be a doji. So yeah, we're above the POC. As long as we're above the point of control, then yeah, I expect to move up to here. 4047 and 4051. But in regards to the retracements, so what we can do is take a look at this on a clean chart. Okay. Okay, this is PulseX here. These would be your retracements. We're going to take it from this leg that started the move towards this supply, towards this local supply. You see how many times we've interacted off of this level here? So the move just before, the move that took us to the supply, so the bottom just before that move, we would take a fib from this low up to this high. And this is how you would get all of your retracement levels for DCA. And so what I'm thinking is if we do retrace from this local supply, we would come down to about 38.2% of the way down to the 618 and then make our way back up to supply again, right? And then it's likely that the fourth time here will be a breakout. So we have to see, these are the retracements. If you go below this level, right, this level right here at 402233 and 402127, then we're just going to come down and stay within this range that I was showing you guys, where we're oscillating back and forth, right? But yeah, this is what I'm thinking on PulseX. It is still looking bearish. The targets would remain the same. Like I said, once we even get to this 702.786, then we know for sure. We know 100% that the bottom is in. And we're going to have expansion towards these targets. Targets haven't changed. Still expecting a move to the 4.236 extension, which is about a 24x. We can take a look at Hex now, eHex. Okay, so this is eHex over here. And you could see that we can take a look at this on the daily time frame, and you could have been able to catch the top just by using moving averages. Like, okay, we'll put the 50-day moving, the 50-21 100 and 150-day moving average. The reason we're using 150 is because I've backtested this on many coins, and you would have been able to catch the top in 2021 if you use this strategy. You can also add the 200-day. It's not necessary, but you can kind of use it as an extra layer of safety, or like so like when we put all of these moving averages on the chart on the daily, you can see how well it's held it, right? You would not sell your bag as long as the price remained above these moving averages. You would know that the price is still within its parabolic phase. And you can see, like, in the thick of it, you may see a top, right? But only in hindsight will you be able to say, oh damn, I sold too early, right? You don't want to have that regret. Like, in the thick of it, you can see that we went down by 60% plus many times. Like, look at that. Like, look at all of these moves all the way up. You get these drops so frequently, 60% on average, right? And in order to avoid panicking, you put these moving averages on your chart and don't touch the position as long as it holds above. Like, you can see that we had a move below here and a move below here, but it was only for a short period of time before it popped back up. You can see that by the wicks and by the way the price was acting, that this was just a fake out. You may get that sometimes when there's market shakeouts. This was actually in, I think this was COVID time. I'm not sure. But yeah. And then over here, so it has this rally up and then it drops below the moving averages, right? And let's just say it drops below the moving averages, but you don't end up selling. That's okay. You would wait for the price to get back above the moving averages, and then when it goes down again, back below it, that's when you would cut the position, right? Because now you're changing your structure. Or let's say you didn't even sell over here. Let's say you didn't sell over here. That's okay. You would just wait for the back test to the moving averages and above it. And then once it goes back below it again, that's when you cut the position. And you would have gotten out at the top relative to where the bear market took us. Right now, what we can also do is use Fibonacci as well. So what I see on Hex is that this is a first wave, and then you have a pause in market structure. And then, so this is your second wave, and then this is your third wave to the upside, right? So you have your first wave, pause in market structure, continuation. So what we can do in that case is use a trend-based fib extension from the low, so from the bottom of the trend to the top of the trend and down to the counter trend. And we can see that it came to around the 100% extension. Yeah, around the 100%. So basically all that means is that if you were to take this leg, copy and paste it onto this leg, it would take you right here. And we just went a little bit above it. We went about 88% above it, which is really nothing, right? So now coming here to the current price action of Hex, it's looking fine. Like I said, nothing has really changed significantly. It looks like we're just grinding our way to the upside. Let me just change the color of this thing here. Okay, this is the wave count, 5 waves, and then you have a pause in market structure. This is a head and shoulders pattern, but it tends to be a retail trap. So let's just see. I want to see a move above 0.0019. If it gets above 0.0019, then we can consider that a deviation, and then our expansion target would be at least the 50% fib at 0.022. Okay, that's EHEX. Thanks a lot, Medic. Appreciate that. So Simon is asking for cake. Um, Helen is asking for Cardano. Yeah. John is asking for Pi, and then Rai is asking for SHX and DBC. All right, cool. All right, yeah, we'll definitely do cake. I think we look at cake on every stream. Flare, Filecoin, and RNDR. That's what Ian is asking for. Yep, cool. I like all of those coins. All of these coins that you guys are requesting, they're great coins. We'll first take a look at H bar. I know Corio was asking for it, so we'll check that out. Now, H bar, it doesn't look too bad. Doesn't look bad at all. Because look where we came down to relative to the November low. Like if you just place a fib from this low up to this high, you see where we came down to? The 702. So if we can get a move, the only thing is that we lost the 200 day, but XRP held its 200 day. So if H bar can just get a move back to the 200 day at 0.1959 and then get above it on the daily time frame, like get a close above it, then we can say, oh, okay, this is potentially a trend shift, because then you'd be tapping into this supply, right? I think I made a chart here on H bar. Let me just try to find it. Okay, that's not it. All right, here it is. This is the chart on H bar. Okay. So you can see that we just came down to tap into this, into this region, which was one supply on March to April 2024. And then we used it as supply back here in 2021 and used it as support in 2021 as well. Right? So you see how important this level is? So if it holds, if it gets back above the 200, then we're taking a look. Then we're going to be looking at the 1.236 extension. Relative to the last all-time high down to the bear market low on the log scale. So around $1.07. We can also take a look at some more conservative targets. Like 68 to 76 cent. So 68 to 76 cent and then 89 to 97. What you can also do to find more confluence is you take a fib from this high down to our expected low, just so we can find a little bit more confluence. And take a look at all of the major fibs here. Okay, and look where that 2.618 is, right? Right there within this region. Okay, so and then the 1.618 is right at the highs. Let me just see if we have more confluence here. Okay, yeah. So I'll put the TPs on the chart here. This is your first TP. right at the highs. This is your TP2 and then your TP3. Okay, so basically, like in layman's terms, to make this more simplified, you would just want to look to exit your position as the price gets to when the price gets to the all-time high and above it. Because let's not forget that this is our channel, right? Where you have an ABC within each of the waves. Right now we're within wave 5 of our C wave. And then we would likely have an ABC down, and then it would just pop off from there and the structure would evolve. But that's what I'm thinking. It's just a channel. So yeah, that's H bar. All right, let's take a look at cake. I'm super bullish on cake. So you see this supply zone right here, it's likely going to come back up to that level and then break above it. So what I'd be first expecting is a move up to this 786. Okay, up to this level. At 256, 2.5653 on the daily time frame. But I'd first want to see a move above these highs at 2.06. If we can get above 2.06, then we're going to make our way up to 256, and then we would get above 256, then we would be testing this supply zone that we've already tapped about 3 times now. Okay, now this is where the composite operator is accumulating. You can see that every time we get to this level, there's a concerted effort to keep the price down. And then as they keep the price down, we're still making higher lows. So if this higher low structure can hold, and then if we can get above 206, make our way up to supply, then it's very likely that we would see continuation and expansion out of our macro range. So this is the macro range that we've been in for about 1,000 days on cake. And all it is Wyckoff accumulation, right? Very simple structure. And like I said, whenever you're on the chart, your first instinct is to place a diagonal trend line and try to draw a pattern. But don't do that. Instead, look at the horizontal lines instead, so you can look at it like a range. Right? So we're just below the median here, right? If we get back up to this supply, then we would be above the median of this 1,000-day long range, right? Over 1,000 days of accumulation. So this is the structure right here. Let me see here. Try to find it. Can't find it here. But yeah, you guys get the point. It's basically this Wyckoff accumulation. And remember what I said, like in the previous streams. If you want to know if you're buying into a good coin, you just need to take a look at 2 things. Does it have price-based capitulation? Yeah, it does. It went down by 97.46%. And then does it have time-based capitulation? Yeah, it went sideways for 1,000 days. So as soon as you get above this supply here at 276 to 293, then it's very likely we'll make our way up to the 61.8% fib on the log scale. right? 618 is about 10 bucks. I also think that we're going to form a local top at the 50% fib, which is 668. So we're going to see likely a move back down to the top of the range. You don't have to trade this move here. You don't have to trade it because it's very risky because it can just come and go. So it's up to you. You can take partials here, and then it's likely going to come up to the 618 and maybe even wick to around 12 to 14 maybe, and then come back down to the top of the range for your backup phase. This was your spring. We perfectly called this bottom on my Twitter, right? Now we're seeing a little bit of a pennant here. We're seeing demand pick up. So if we can just get above the supply, then we would be looking for these targets to play out. This would be what's called your sign of strength. So you have your spring, you have your test, then you have your last point of support, and then you have what's called your jump across the creek. So this move over here is your creek. See, such a very long and painful process for holders. Right? You see, I was just creaking down here. So this move here would be your jump across the creek into your sign of strength, and then a move down for your backup phase. Okay, so just remember that cake is still within a range, right? Don't go max short, max long. Just be mindful that it's still in its own range. So yeah, that's cake. 668 to 1037 with the possibility of a wick to around 11 to 14 buck. And then a move back down to around 439. This is dent over here. Nice ascending accumulation here. Or sorry, ascending triangle. So let's just see if it can test this level here and get above it. So YC is saying Bitcoin DOM looks like it's falling. Yeah, let's see here. Yeah, it's fallen. For sure. Now, I know I said that Bitcoin dominance would likely hit 65 to 66%. So let's put this on the white chart here. Right? So this is my wave count here on Bitcoin DOM, right? Let me just remove this drawing here. Right? You have a 3-wave move up, 3 down, and then a 5-wave move to the upside. And we still have a little bit more room to go, like around 65, 66%, then we see the drop. But what if we come down below this daily momentum indicator? This is our daily momentum indicator. You can find it right here. Let me show you guys. CM Ultimate MA by Chris Moody. Make sure it's the version 2. Go below this on the daily and then get 3 consecutive daily candle closes below it. Then we should be good to go. We should be good to go, and we could say that this was a top here. Because if we look at this a little bit closer, like on the 30-minute, it actually took out this high here. Do you guys see that? How it just took out that high? And it probably came up to the 1.236 extension. Let me just see if it has. If it has, then this could have been the top here. So if we just take a fib from this local high down to this local low and look at the 1.236 and 1.382. And yeah, it perfectly hit the 1.236. And the reason that's The reason that's so important is because, like I said in my previous video, let's say you have your run up here, right? This is your run up, and then the price starts to consolidate. You could take a fib from this high down to this low, and if you want to know if the next move is a fake out or not, you would just see, did it reject off the 1.236 to 1.382? If it gets above the 1.236 and 1.382, then this move is likely not a fake out, and it's going to go higher. But if it doesn't get above it, then it's likely a fake out, and then we go in the opposing direction. And this is what we see over here. You see? See how it perfectly tapped it? So let's see. Let's see here. I want to see a move below this 786 and this 702 and this 618. If we can get a move below 63.52 to 66.34, then we would be looking good, because you'd be breaking structure from a 10-day long range. Let me see here. Yeah, April 7th. But remember, daily time frame, we need to see a move below this momentum indicator. That would really give us this signal. Okay. So Mikana is asking for cake versus Bitcoin. You know, the cake versus Bitcoin pair is outperforming, so it is outperforming Bitcoin. You can see here. It's outperforming. Right? It's just within accumulation, still in a range. This is now when the market is doing this. When the market is doing this, that's when people make the least amount of mistakes. But when the market is doing this, that's when people make the most amount of mistakes. They lose their portfolio. They enter into crappy futures trades that stop them out, right? Because this is consolidation before the next run. And before this next run, what the market makers are trying to do is shake you out of your position. So always ask yourself, where is the market trending? Is it trending up, down, or sideways? Right now we see it has trended up. This is our first leg, and now it's going sideways. So don't touch your cake right now, because it's still manipulating and chopping around. But what I do see is a move back up to this supply here on cake versus Bitcoin pair. And then if we can take out this level here, then we're off to the races. But yeah. All right, so let's take a look at Cardano for Helen. Helen was asking for Cardano. Ondo? Yeah, sure. Ryan is asking for Ondo, yeah. Okay, so we'll just take a look at ADA here. Now, I'm super bullish on ADA. I'm going to show you exactly why. You see how it's coming? It's now above our momentum indicator on the daily time frame. And I mean, we haven't really gotten above it and had significant price action above it. Like, you can see that we got above it here, but the price action was very corrective, and it was still at the highs. We got above it here a couple of times, but it just kind of fizzled out over here, and then it went back below it. But now we're just inching our way above it. So let's just see here on Cardano. It looks pretty bullish. And Cardano, it came down to the 618 here. I think I made a chart on Cardano right here. Okay, this is not the chart here. Not sure. Maybe it's on my CoinTrader Pro chart here. Let's just see. All right, there we go. Is this it? Yeah, so this is what I see on Cardano basically. It's a huge leading diagonal. Now, these are usually structures that you see in assets that are going to survive in the future runs to come. Like, you tend to see the macro structure do this, and it's slightly trending upwards and making higher highs and higher lows. That would be a wave 1. Right? And then you have an ABC down, and then you have your wave for your wave 2, and then you have your wave 3 in the next cycle. So this is what you tend to see if you know the assets are going to survive in the next runs. Like, for example, Solana did this structure, ETH did this structure a little bit, QNT as well, but QNT is within its 5th wave. There's more coins that did this, but yeah, this is ADA, and basically there's an ABC within each of the waves here, right? ABC down, ABC up, ABC down, and then you have your A, B, and we're still within our C wave. That's what I see. So I'm thinking this could be a wave 1, a wave 2, you have your 3rd, 4th, and then 5th, like that. So for the targets, we would be taking a look at $1.74 for the next point of interest. So a little bit over 100% gain from the current price. As soon as you get above $1.74, then we would be targeting 546 to 790, which would be the 1.236 and 1.382 extension relative to the 2021 highs. Okay, you can see the macro structure looks fine, and all we did was come down. All we did was come down to this 702, 786. You see? If we just take a fib like this, like that, you see where it came down to? And we also came down to this support right here. This structural support that we've been using as supply from May 2022 to March 2024. So this is a very important level. But when have we ever used it as support? We haven't used it as support until 2025. And this is now. And this is a triple tap. So let's just see if we can get above these daily moving averages. Right now, we're still... Yeah, I think we're above the 21-day. I would want to see a move above the 50-day and 100-day. As soon as you get above the 50 and 100-day, then you know, like, for sure that's the low. But yeah, expect a nice run on ADA. So JRLs is saying sounds like ICT. Yeah, ICT is good. I use that in conjunction with Elliott and Wyckoff. For anyone that wants to learn ICT or Wyckoff, I think you should definitely do it. Don't hesitate. It'll really teach you about market structure. But if you're gonna learn, let's say you want to learn Wyckoff, learn Wyckoff and then learn ICT, and you'll notice that a lot of them have very, very similar types of structures. But yeah, let's take a look at some more coins here. All right, we'll take a look at Flare here. Before we take a look at Flare, let's just move back to XRP, just see what it's doing here on the small time frame. Go on the 4-hour here. Now, before we end this stream later, I want to touch upon the stock market and how it looks, more specifically the S&P. I do think that the S&P may have put in a way for a low. So this is XRP, no change. I still think we see a little bit of a push higher to around 214 to 216. Let's take a look at Flare here. Flare looks great. It's actually front running. When we take a look at Flare here, we can see that back in August 2024 down to November 2024. So about 3 months of this sideways price action. You see how we sweep it this low and then we rally by over 200%, right? So this was the market maker buying up all that fear below this established range. And we could see the exact same thing over here, right over here. See, this was the market maker buying. And if you take a look at the weekly, you actually put it right here. Yeah, so put it right there. This was your sweep. See, you sweep it on the weekly. The price retracts back into the range, and then you have a bullish engulfing. This was your signal that the bottom was in, where you had no weekly closure below this line, right? You'd mainly want to look for the retraction. How does it retract, and is it retracting? And look how it retracted back in with a bullish engulfing. And then this is what we see here on the 30-minute time frame. We'll go on the 4-hour. This was your change of character. So this was your break of structure. Okay. This was your change of character. Okay. And then right after you have your change of character to confirm a change of trend, look where we come down to. We just come down to this bullish breaker. You see, and then we make a higher low from there. So what I would want to see here going forward on Flare is a move above 0.017 on the 4-hour time frame, in order for us to have extra confirmation of a move towards this level right here. Or what we can actually do is just take a simple fib from this high down to this low, and we'll take a look at these fibs here. On the linear scale. Okay, this would be the next point of interest on the small time frame if we can get above this level here. But yeah, it's just purely a manipulation algo that market makers use. We can even see that just before Sologenic did a 5 to 10x, it did the exact same thing. Like, look at Sologenic, guys. Do you guys see how the market makers are working here? Like, look at this range. We sweep it like this in September, and then we pop off by over 947%. So you can see that it's a very similar structure to that of what we have on Flare. Okay. Market makers doing their thing. I'm just gonna get some water, guys. I'll be back. Hello? I'm back, guys. Just had to get some water. We'll take a look at KDA, and let me see here. Ondo for sure. All right, yeah, we'll take a look at Ondo. I think Ondo, President, Trump's team was buying some Ondo like a couple months ago. Let's take a look here. So Ondo, it doesn't look that bad here on the daily. Kind of like the same thing we see on Flare, right? Where you have a sweep of this low and then a move back up. So you sweep this low on Ondo, take out these highs, and you have what's called a partial decline. Or at least for now, we can consider it a partial decline. If we move back below this retracement here, if we move back below this 702 at 74 and 72 cent, then we can invalidate the possibility that this was a successful deviation that would produce a trend shift. However, if we can sustain momentum, then yeah, this is the bottom. See, what if this was just an ABC? Like you have your 3 down in your A, 3 up in your B, and then a 5 down within your C. And this was just a flat pattern. You see this is what a flat pattern is. Okay, so then this would look like a running flat because the C wave failed to terminate at the low of the A wave. You see how it just terminates just above the A wave here, and it doesn't come down fully like the expanded or regular flat. Like, look here, it didn't come down fully, just came down to the 786. Look at that, perfectly came down to the 786 there. So I would say Ondo is a good buy as long as it can remain above that 786. Not financial advice. Okay, this 702, 786. And remember what I said in my previous videos. Price comes down to the 702, right? Price comes down to the 702. Everyone thinks it's the bottom. You have a little bit of a rally, and then we slam down to the 786, and then that's the bottom. And look what we did here. We went up a bit. Everyone thought this was the bottom, and then we slam down to the 786, and then you actually sweep this low, and then you get bought back up into the range. So if we can stay above this level, then we could say, oh, okay, yeah, this was just a running flat. And then we're going to go in for the next leg, and then these would be your targets here. First point of interest would be, first major point of interest would be the 786 at $1.80, $1.80 to $1.81. Yeah, so we'll see how it plays out. We can also put our momentum indicator on this as well, and we're above it. So we're above it on the daily. If we can stay above it, that would be great. So yeah, that's Ondo. Let's take a look at BTC here. Now, taking a look at BTC, remember I was showing you guys on the 4-hour time frame how we have this little range, right? There's a lot of supply over here, and bulls are pushing the price up to this level. You can see how many times we got up to this level: once, twice, 3, 4, 5 times here. And then we dipped back down to the lows of the range. And now we're making our way back up. So this would be the 6th time it's come up to this supply zone. Right? If you get above, then we're going to take out the liquidity that I've been showing you guys on the liquidity heat map, and we'd be making our way to the 200-day moving average at around 88,000. So this is the liquidity heat map over here, or liquidity heat map over here. You can see that just above that range that I pointed out, we have about $179 million of liquidations there. About 179 million. However, we are starting to see this liquidity pocket below this range starting to get a little bit stronger. This wasn't as opaque as before. Or sorry, yeah, it was less opaque from before. So it looks like we have $153 million in liquidations just below just below 83. So let's just see. It'll be interesting to see how this plays out. Maybe we tag the 200-day, come back for this, and then we continue off. Or maybe we don't even tag the liquidity down here. We'll see how it plays out, right? Or it comes down here first and then pops off. We'll see. So now, what I'm thinking on Bitcoin here is, what if this was just an ABC, right? What if this was your wave 1, your ABC down for your wave 2, and now we're within, and now this is the third leg, right? This is your third leg to the upside. Within that third leg, you have a wave 1, a wave 2, a third wave, fourth, and then you have an ending diagonal within your fifth. So this would be your 1, your 2, your 3, and then you have an ABC for your 4, where you have a 3 down in your A, 3 up in your B, and then a 5 down within your C. So what if this was just a wave 4 before we have a wave 5 to the upside to around above 108? There is a possibility of that. Something I've also noticed is we came down perfectly to the 50% fib here. Do you guys see that? How we perfectly hit the 50. When we take a fib from the low of our wave 2 to the high of our wave 3, it perfectly taps the 50. So if we can just get a move above this 200-day and then get a daily close above it, then we should be good. And like I was saying to my Discord members, there's so much liquidity above this trend line here. Like, you can just see how many people, you can tell that many people are shorting this trend line here. So this would be your trend line liquidity. Think about how many traders are placing their stops here. Now, a bear could argue that there's many traders placing their stops here because this is your equal low sell side. But let's see how it plays out. All right, let's take a look at KDA. I actually really like KDA and the structure it's producing. I think it's bottomed here actually. KDA, not financial advice. I think it's bottomed right here. Because look where we came down to. We came down to the 2021 low before we did 70x. Yeah, 74x. So look where we came down to. We came down to that low. Not only did you come down to that low before we did 70x, but you also swept this 1,000-day long range. So this is your range, and these are the established lows, or your psychological support of that range that we've been in for almost 1,000 days, and then you sweep it right here. You see this low in August, before we had a fake rally of about 448%, we swept that low as well. So the fact that it's retracted back into the range is sufficient enough for me to say this is just a deviation, and it's the exact same thing as cake. You can see that that was just a deviation. This was just a deviation. This was February 2nd buy bet hack. Look how fast we got bought back up here. We called this bottom perfectly, like right to the tick on my Twitter. But yeah, let's go back to KDA here. I actually think I made a KDA chart on another layout, but we'll just look at it from scratch. So now this is equal high buy side liquidity, so it's very likely we're going to come back up to $1.97. It's very likely because we have these equal highs here. I mean, this high went a little bit above this one, but I would still consider this equal high buy side. So lots of liquidity resting above $1.97. What we can do is take a fib from these highs down to this low and take a look at the major fibs on the linear scale. Okay, these are your fibs. Okay, so now what I'm thinking is this was your spring right here on April 7th to April 11th. Then you have a move up. Then you have a test. And then once you move up to the mean of the range or the median at around 85 cents, you probably have a little bit of a retrace again, and this would be considered your last point of support, right? You usually tend to get two of these if you're lucky. If you're not lucky, then you'll just get one if you didn't end up getting in over here. Now remember, this is just an estimated trajectory. Don't take any trades based off this specific analysis that I'm showing you. I'm just showing you how a Wyckoff structure looks. Once your spring comes in, you have what's called a jump across the creek. So you see this creek over here, very painful, long process. It's creaking down, right? And then it goes back up. Everyone thinks it's the top, and then it creaks down again, and then you have your spring. So this move here is your jump across the creek, and when you get above the macro range, this would be danger zone, right? This would be your danger zone, because this would be what's called your sign of strength, and you'd wanna de-risk heavy here for the anticipation of a move back down to the top of the range, and it's likely going to come. It's likely not going to go and test these all-time highs right away. And we can also get some more confluence with the fibs. We can see that right where the 4.236 extension is, that's where this macro 702 is, right? And just above the 2.618, we have the macro 618 at 514 that I wanted to do for you guys. And we'll do a more in-depth stream on Monday, likely pre-New York session. So before we end the stream, I just want to take a look at the S&P here. And I want to show you something that caught my eye. We can take a look here. Okay, so look at this. Look at this wave count. back in 2021, that was the crypto top. When the S&P topped out, you had a descending broadening wedge, or a bullish descending broadening wedge pattern. If you pull out the RSI on the 3-day time frame, you had bullish divergence, which marked the low. This was also when Bitcoin bottomed out. Then you had a leading diagonal to the upside, similar to what we see with altcoins now. We have a leading diagonal on the small time frame. Then we have an ABC down for your wave 2. And then we go on to start our massive wave 3, which lasted from 2023 in March up to December 2024. Right? This was your wave 1, 2, your third, fourth, and then you have an ending diagonal within your wave 5 of 3. Now, similar to that of what I was showing you guys on Bitcoin, we have a corrective structure. Like, look how we come down within this A wave. It's a 3-wave move. We go up in the B wave. We go up in this B wave in a 3-wave move as well. So that just shows me that this is very likely it's a corrective move rather than an impulsive move down. And then you have a 5-wave move for your C wave. However, we would need to see support hold. So currently, let me see here. Now, I believe we do have a death cross, but I don't think it goes significantly lower. Let me just, I think we actually rally back above the death cross. So this is the death cross right here. We can add the 50 and 21 day, or sorry, 50 and 200. So this is 50, and then this is the 200. And we also have a death cross on BTC as well, but I think it rallies above the death cross. I don't think it's a good indicator to use when determining if the price is going to go down. You usually rally back to it. So let's just see. We have a gap here at 55.10 to 56.37. We're currently on the 38.2% fib. So let's just see next week. Will we get a move back up to this gap and come back to retest this death cross? Right? As soon as you lose EQ at 51.54 and the 618 at 50.78, then it's possibility that this is a failed attempt at a rally to the upside or a failed attempt at a reversal. Something I've also noticed that I wanted to point out on the weekly is we have what's called a piercing line candlestick pattern. Look at this chart with the naked eye. Let me remove everything. You see the week of March 31st? This was your suicide candle. Like, look how bearish this candle looked, right? The following week, we pierced the lows of that candle, and then we rally up 13%. And then we close this week off above 50% above the previous week. You see what I'm saying? So this is what's called a piercing line reversal candlestick pattern. If we can hold structure next week, we'll be doing live streams next week. If we can hold structure, then it wouldn't surprise me that this was simply a wave 4 before we come up for a wave 5. And yeah, that would likely also mark the bottom of Bitcoin, right? We just have one more push to 63.74 to around 66.23. And yeah, we're holding this historical support as well. So that's pretty good. So I hope you guys enjoyed the... Good morning, Daniel. Glad to have you here. I forgot to take a look at SHX. Let me see here. All right, let's take a look at SHX here. I think it's this wave count, but it would need to hold that level in order for this to play out. Otherwise, it's gonna come down like this, like a flat pattern, but have a little bit more of an extended C wave. If we lose this level here at 0.0064, and then to find the targets, you can just use your trend base fib here. Like I was showing you, whenever you want to find your wave 5 target, just use a trend base fib. Okay, so we'll see how it plays out. This could be a 1, 2, 3, 4, and then you come up for your 5. I'm not too confident on this structure, but let's see how this support holds here. But yeah, I just wanted to do this quick live for you guys for just before we head into Sunday. I hope you guys got some value out of this live. We'll make sure to take a look at the rest of your coins on Monday, and we'll also watch how the stock market opens. Hope you guys enjoyed the live stream. I'll see you guys in the next one. Peace out and take it easy. Peace out.